Thank you for standing by and welcome to the LBT Innovations Quarterly Investment Call. All participants are in a listen-only mode, so be rest assured that nobody else on the call will be able to see or hear you. There will be a presentation followed by a question and answer session that I will announce at the end of the presentation. To ask a question, please use the Q&A box in the control Zoom panel, or feel free to raise your hand to ask a question in person. Unfortunately, those joining by telephone will not be able to raise a question. An audio recording of this call will be made available on the company's website later today. I would now like to hand the conference over to Mr. Brent Barnes, CEO and Managing Director.
Thank you, Jack, and welcome everybody. It's a pleasure to be joining you all today on our quarterly investor call. Let me start by stating that our mission is to disrupt microbiology culture plate reading. Really specific, really simple. This quarter, the company has formalized progress towards disrupting two major global microbiology segments, namely clinical microbiology and pharmaceutical quality control microbiology. Going forward, the company will communicate progress against both these large segments that we will call APAS Clinical and APAS Pharma QC. This quarter, we formally kicked off development for our new APAS Pharma QC product line in partnership with AstraZeneca and Thermo Fisher, and also launched the APAS Independence with Thermo Fisher as our exclusive distributor in Europe, expanding our reach within Europe to a further 30 countries. The call will follow our usual format. I'll provide an update on the company's activities for this last quarter. Ray, our CFO, will then summarize our quarterly cash flows and financial position before I provide an overview of our future outlook and upcoming milestones. There will be an opportunity for question and answers at the end of the call. Now, I would like to introduce our Chief Financial Officer, Ray Ridge, who is with me on today's call.
Thanks, Brent. The usual formality before we commence. I would like to remind those on the call that today's update may contain forward-looking statements, which do involve inherent risks and uncertainties. Those risks and uncertainties include those disclosed in our ASX documents, which we recommend that you review. There are reasonable grounds for any forward-looking statements made today. However, due to their inherent uncertainties, we recommend you do not place undue reliance on those statements, and actual results may differ materially from those forward-looking statements. We're now ready to go. Back to you, Brent.
Thank you, Ray. Look, as I said in my opening, the company is focusing on both APAS Clinical and APAS Pharma QC product and market segments. Both are at different stages of commercialization and product maturity, but importantly, both applications utilize our existing hardware platform. The development work for APAS Pharma QC is funded and utilizes the same AI technology stack to deliver a new analysis module for this different application. I'll start, however, by talking about the clinical market, which remains our primary commercial focus and where our energy is directed towards, with Thermo Fisher as our exclusive distributors of APAS Independence. At the start of this year, the company expanded the distribution agreement with Thermo Fisher to cover all of Europe, which means APAS is now being supported in 35 countries globally. From a European perspective, we are just at the start of that journey of in-market country expansion. However, the agreement does lay that foundation for growth across a broader geography than we've been able to achieve previously. Following the distribution expansion into Europe, there has been a high degree of focus on establishing their sales teams in Europe to sell the APAS Independence. This has involved several trips by our executive team, myself included, to meet with Thermo Fisher. In January, we met with vast numbers of Thermo sales teams from both the US and Europe, where product training and account planning was completed. More recently, we attended the European Congress of Clinical Microbiology and Infectious Diseases in Copenhagen, where there was a record attendance of over 16,000 delegates attending in person. Thermo Fisher officially launched the APAS Independence under their banner during this conference. This was the first time in 8 years that we had not had our own booth presence at the conference. Instead, the APAS Independence was front and center on the Thermo Fisher booth. It was great to be part of something much bigger than we've been able to deliver on our own previously. The Thermo Fisher team were absolutely fantastic, arranging a dedicated APAS Independence launch event with talks from key opinion leaders on the booth and sponsoring an integrated symposium with a presentation from Dr. Wisplinghoff on the benefits of artificial intelligence for clinical microbiology laboratories. There are also several poster presentations featuring the technology, including new data of our APAS AMR module for antimicrobial susceptibility testing. From a sales perspective, we continue to make steady progress, with 2 sales completed in the quarter. One direct sale to Labor Dr. Wisplinghoff, and the sale of a demonstration unit to Thermo Fisher for customer evaluations in Europe. In the United States, progress is slower than we would expect, with the current economic conditions meaning laboratories are imposing restrictions on capital allocation for new purchases. Thermo Fisher have a range of financing options in place to help address these issues. However, we do expect steady but slower progress to continue in the market until these conditions improve. Finally, in Europe, we completed our CE mark IVDR for our MRSA analysis modules and the instrument. This was required to ensure we can continue to sell the MRSA analysis module under the new in vitro diagnostics regulation and maintain our previous CE marking under the old regulations. I'll now talk about APAS Pharma QC and want to say from the outset that our company remains focused on revenue-generating activities. Shareholders should understand that delivering product development milestones for APAS Pharma QC is an important funding deliverable for the company. During the quarter, the company has shifted our development priorities to focus on our expansion into the pharmaceutical quality control market. This opens up a new and exciting industry application for our technology and has also created the opportunity to generate revenue through funded product development partnerships with AstraZeneca and Thermo Fisher. This creates important cash inflows for the company that supplement revenue generated through product sales in the clinical market, resulting in improved cash management and only $0.3 million in operating cash outflows for the quarter and $0.4 million year to date. We'll have Ray talk more about that later on. In January, the company finalized a development agreement with AstraZeneca to develop a new APAS analysis module for APAS Pharma QC. This followed funding by Thermo Fisher in December of 2022, which was primarily to support development of their media for the pharma application. Together, approximately $1.7 million in funding for development of this new application has been contracted and will be received as technical milestones are achieved. The new APAS Pharma QC module will leverage the existing APAS Independence platform for the reading of culture plates used for environmental monitoring during sterile drug manufacturing. The application is perfect for our technology, with large plate volumes and the vast majority, often over 95%, showing no microbial growth. The APAS Independence is extremely sensitive to growth detection and can automatically screen the majority of the plates from the workflow, providing important efficiency and data integrity improvements. With the new funding secured, our development team's focus has shifted to execute the agreed product development schedule. As part of this, an APAS instrument was shipped and installed to AstraZeneca at their Macclesfield campus in the UK, which will be used to support the development activities through capturing of real-world data. I was able to meet with the Macclesfield team on site just a few weeks ago, and also was able to observe their manufacturing processes firsthand. Extremely impressive. It is clear from the engagement that this key project it's clear from the engagement that this is a key project for them, and they see APAS Pharma QC as an important technology supporting their production facilities, not only in the one location, however, across their global drug manufacturing sites. In parallel to our product development activities, we have commenced business development in the pharmaceutical market and conducted a number of meetings with big pharma customers during the quarter. The interest and engagement has been really positive, and there is a clear difference in the market dynamic to what we observe in clinical, where there is a much greater focus on data integrity and standardization across manufacturing processes. This is supported by positive market drivers from regulators, such as the new EU GMP Annex 1, who are putting pressure on manufacturers to adopt new technologies such as APAS to improve data integrity of their processes. As a result, we see great potential for an accelerated uptake of the technology across many drug manufacturing sites as customers look to standardize their processes. I'll hand it over now to Ray to talk through the financial results for the quarter.
Thanks, Brent. And hello all. I will now provide an overview of the financial results as reported in the Appendix 4C lodged with the ASX. These numbers are all in Australian dollars in accordance with ASX listing rules. They are not audited. So for the quarter ended 31st of March, LBT reported net cash inflows of $500,000. This comprised net outflows from operating and investing activities of $500,000, comprising $1.1 million from customer receipts, less $1.6 million in outflows. The outflows included $500,000 for inventory purchases, so a $1.2 million underlying cost base. Net cash inflows from financing activities were $1 million, reflecting $1.5 million proceeds received from the Lind share placement, less $500,000 in quarterly loan repayments to the South Australian Government and capital raising costs. Importantly, the year-to-date net cash outflows from operating and investing activities over the last 9 months is just $0.6 million. As a result of the inflows from customers, securing alternative sources of funds for development and cost management. That leaves us with a cash balance at 31st of March, 3.1 million. In addition, in the near term, the company expects to continue to receive funding for the APAS Pharma QC development, the F23 Research and Development Tax Incentive, together with receipts from instrument sales. Beyond that, the company looks to the 2024 calendar year with some optimism, with the expectation of building sales and the completion of the APAS Pharma QC product expected in the first half. We expect multiple sales of the APAS Pharma QC in the second half, with AstraZeneca having invested 1.1 million into the development of the product with the aim of standardizing quality control processes across their manufacturing sites globally. The company is working hard to bring in at least one other large pharma company to validate and trial the product in parallel with AstraZeneca. These pharma sales are expected to be direct and therefore no distributor margin. Back to you, Brent.
Thank you, Ray. Looking forward, our focus remains on revenue generating activities through both product sales and funded product development activities. In the clinical market, we will continue to work with Thermo Fisher sales teams in the United States and Europe to help drive sales conversion in these markets. A key part of the process is supporting Thermo Fisher in the execution of customer workflow assessments for advanced sales opportunities. As the sales funnel is progressing and expanding, we plan to transition to Thermo Fisher, taking a greater lead in these initiatives as they become more familiar with the technology, particularly in Europe. In June, we will be attending the ASM Microbe Conference in the United States. As the largest microbiology conference in the US, it's an important opportunity for us to engage with customers again. The APAS Independence will be showcased by Thermo Fisher as a key part of their microbiology portfolio. There will be new clinical data featuring the APAS Independence also presented at the conference. From a development perspective, our priority is on executing the product development for APAS Pharma QC, with the goal of having the product available for evaluation in the fourth quarter of calendar year 2023. We will continue to ramp up our pharma business development activities and are targeting to place an APAS instrument with a second pharma customer before the end of this calendar year. For the APAS Compact project, we have completed a voice of customer study to understand key product features and the expected demand for this product. The results were extremely positive, and we see a great opportunity for this product in both clinical and pharmaceutical verticals. This important project will continue. However, based on our current focus on APAS Pharma QC and its funded development, we expect progress in this area to be delayed slightly in the short term. In closing, the quarter represents a key inflection point for the company where we have now established large market opportunities in two major industry sectors, clinical and pharmaceutical quality control. Importantly, both of these opportunities are built upon the same APAS technology platform, which we're now leveraging with the backing of global partners. I'll now hand it over to Jack to open up for question and answers.
Thank you, Brent.